Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look at the gold market again. So yes, the market also has shown a significant drop down. So almost all other financial markets does in relation to the US dollar, so the US dollar has become stronger. Well, this action, guys, should not be a surprise for us, since we have talked about this recently. It's just market that was dropping for months, just can't turn to the upside in the blink of an eye. So it needs some time to fade out the former bearish momentum, and that's why it's absolutely normal and logical to see the deep retracements on the market in the moment of the reversal, or in the moment when the market shows the significant retracements. That's why yesterday we said that it will be no surprise if market even will reach the major 618 support. So 1120 area is around monthly pivot point, because it's very it's a lot of different patterns and factors point that this really could happen. First of all, it was daily overbought that suggests deep retracement. Second is that market has formed today's significant bearish engulfing pattern that has deeper target, as we have discussed yesterday, and this approximately stands in an area of daily oversold and fib support, and that's why market has dropped really significantly. But right now market is approaching to the significant support area, and for the bulls it will be better if market will find support here and then turn to the upside. And this really could happen, because take a look right now, we could get the bullish grabber right around the support area. If we will get the grabber, it will mean that the market should take it out with this top. So it will be a very significant pattern. Second moment, if you will take a look at the 4-hour time frame chart, you'll see that market has hit our destinations around the weekly pivot support one, but right now market is entering in the previous consolidation that stands precisely around the 12 even area, 11-12 area, around the monthly pivot point and around major fib support, and it also should provide some support to the market. So market could find some support here, and the second moment that we should watch for in the nearest future is possible reversal patterns in this area. So the first pattern, we will be watching for the grabber. Second, we will be watching for possible reversal patterns here. Because despite the retracement really deep and strong, we probably will be able to return back to the discussion of the further drop to the reestablishing of the bear trend only if market will take it out of the 1080 area again. So if market will drop lower and will below the former lows, in this case we could say yes, that was probably just minor retracement, and we should be ready for the further downward action. Until this will happen, the upward reversal and upward in the changing sentiment of gold market is possible, because if even market will return back to these lows, this could be some kind of the double bottom, especially if we'll take into consideration that the seasonal trend now is turning bullish on the gold market. This really could be the chance, and the drop to the former lows will not be something outstanding. This is normal, again, because the market has significant bearish momentum in the market, and it needs time to reduce it. So it will be good if market will find support here and turn to the upside right from that area, but it will not be this will be just a bit different scenario if market will form some kind of the double bottom. It's also possible. And again, as I said, only if market will take it out of these lows and continue to move lower. In this case, only in this case, we could start to talk again about the reestablishing of the bearish sentiment and bearish trend. But somehow, guys, I think that probably will not happen. At least there are some hazards that really could not happen, because when some disbalances that stands in the global economy will start to come on the surface, and recent drop on the stock market and the rallies on the safe haven assets, this is not just occasional action. That's particularly the misbalances that starts to come on the curtain, starts to come on the cover, and move on the surface, that would put the hazard and could become the first signs of the hazard that the Fed Reserve and the United States economy can get uncontrolled crisis on the stock market, because this is obviously the bubble, and sooner or later it should blow. And the one way how they could prevent it, there's just one single way that they have, is just start the quantitative easing for it. Because all other legal, let's call it as the legal measures that they could take, they already have been taken. So the hedge funds, the free money that was on the market previously, the hedge funds, the pension funds, the institutional investors, the individuals already put the money in the stock market. When these sources have been utilized totally, the Federal Reserve had launched the quantitative easing to support this market. This money was just pumped in the stock market because we do not see the growth of the earnings on the companies that could match the growth on the stock market. So that's why there is no source in the world right now that could independently support the same pace of the growth on the stock market. And one way how they could a bit to soft the possible blow is just to make the temporal, from time to time, significant injections to just relieve this possible blow. If they will not do this, this will be could become some financial Armageddon. This will be even worse than in 2008. This really could happen, but because there's just free money that could support the demand on the stock market in the United States. It's really they need too much liquidity to do this, and this absolutely definitely not the growth that is ruled by the normal economical laws of demand and supply. That's artificial growth. That's why the blow will be huge. And currently, I suspect, guys, that's just my own opinion, that current relief that we see, some retracement on the stock market, is just the relief from the first shock. And right now, investors will start to reassess what is really going on. And somehow I think that we will not leave the situation just as no happen. Something probably we will see something. That's why I think that even recent drop on the gold market, although this was really strong, I just suspect that probably it will not finish just in market, hardly will turn again to the bearish development. Currently, the chance that market really could continue move higher still exists until market, as I said, will not taken out of these lows. So, and how it will turn in reality, we will see.